get into the residential space is the question which is pondering on everyone's mind. Well, we're joined by our speaker cum moderator, Mohammad Aslam, the President, Capitals Market, Anarok Capital Advisors Private Limited. Joining us in our panelists are JC Sharma, Vice Chairman and Managing Director, Shobha Limited, Abhishek Kapoor, COO, Residential Business, Puravankara Limited, We're also joined by P. Ravindra Pai, Managing Director, Century Real Estate Holdings Private Limited. We're also joined by Amit Parsuramka, the Senior Vice President and Chief Sales and CRM Officer, Tata Realty and Infrastructures Limited, and Irfan A. Kazi, Chief Investment Officer, SWAMI Investment Fund. Well, ladies and gentlemen, with this, I present to you our esteemed panelists and all our moderators on the stage and screen. Over to our moderator for taking it forward. Mr. Aslam, over to you.
Okay. Thank you, Bhavna. And thank you all the participants for this discussion today. There's a huge amount of collective experience and expertise on this panel, where we will discuss an interesting topic. Where are the investors in the Indian residential market today? This is an important topic. As we are all aware, it was primarily demand from end user that has been driving the property market for the last few years. This is in sharp contrast to earlier years, where investors were the main segment of buyers. In fact, most developers created a lot of inventory, mainly for investors in the past, because investors would often pick up several properties at one go. However, excessive inventory actively also caused prices to increase unnaturally. This is also known as speculation. And while healthy investor activity is a good thing and desirable to keep the market momentum going, speculation has harmed the industry. I'm sure you all agree with me on that. Speculation basically involves buying properties when developers open their sales or at the launch before for the normal public. They sell the property at a very low rate, which investors buy, and they will sell it at much higher prices later. Thankfully, the days when such activity was possible and profitable are finally over. When we say that end users are driving sales, it basically means that only people who want to actually use these properties are buying them. In an end user driven market, prices tend to remain affordable, but this also means that profit margins of developers take a hit. The current level of inventory across India requires investors to become active again. With inventory increasing and lending rates coming down, will we now see investors coming back to the housing market? This is what we are going to discuss with the eminent panelists today. So with this background, my first question will go to Mr. Ravinder Pai. Mr. Ravinder, in an interview last year, you had made some pertinent remarks on how Century Real Estate Holdings identified suitable locations and configurations. You also remarked that post-RERA, customer interest had begun to pick up. Of course, COVID-19 has changed the whole equation, and the market now almost completely driven by the end users. So my questions are like few questions with you so that you have enough time to tell us on those. How do you calibrate your inventory pipeline now? Are you building for end users, or do you factor in interest from the investors as well? Also, I want to understand from you what your views on the increasing demand from the investors on plotted development plus ready to move in luxury segments. So over to you, Mr. Ravinder. Ravinder Pai, can you hear me? Mr. Ravinder? I think he is not able to listen to me. Let me move to Mr. JC Sharma. Sir, can you hear me?
Yeah, I can hear you.
Okay, sir. Good afternoon, sir. My question to you is, Shobha Limited has posted 16 crore profit in quarter 2 2020. This is a remarkable achievement, sir, given the lockdown and COVID scenario, which we have seen everywhere. Shobha Limited is known for studying the market very well. I'm sure you analyzed the most recent buyer's profile. Do you find the investors are back, or were your buyers largely? If you did find investor, what are they looking for? Mr. Pai, I will come back to you again. I just raised a question to Mr. Sharma. I will come back to you again, sir.
I'm sorry, I think I had some technical difficulty.
No problem, no problem. I think Mr. Sharma, I just raised a question to Mr. Sharma. Let him answer, then I'll come back to you.
Sure.
Yeah, Mr. Sharma, please go ahead. Mr. Sharma, can you hear? Mr. Sharma, can you hear me?
Yeah. So
yeah, please.
Basically,
yeah, please.
I have got your question right. See,
yeah.
in any market, if you really look at, investors do play an important role of ensuring that right they create the right price structure, right timing structure, provide liquidity to the developers, and at the end of the day provide a good product whenever the actual buyer comes in to them as well. In North India, we have been seeing this kind of a broker-driven, investor-driven market, which had been working for decades. But when we come back to the South market, we have seen, of course, till 2008, global financial crisis, everybody would like to see that he doesn't buy one home. If he has got excess liquidity, he would go and look at buying multiple homes also. But right now, post 2013, once we have been going through from one crisis to other crisis, and the prices of the end product, they refuse to go up. At the same time, right, the end users also have been differing their purchases. In my view, what is currently happening is a right way of structurally correcting the market also, and at the same time, in due course, allowing the investors to make an entry as well. It's like how the stock market functions, right? When the market starts improving, the investors start coming in, and they also would like to put whatever contribution they can make at the point of time. But as things stand today, with low interest rates and India being under-owned from the actual user point of view, I do believe that it will take a lot of time for the investors to get into it. Focusing more on the actual users, and that has helped us to sustain a sales volume during good times or during bad times. We have not launched projects for last 4 quarters, but last quarter's performance has been on value terms higher than what it was same quarter last year, and have tried to create kind of a manufacturing operations to see to it that you need to pay your interest, your salaries, your construction cost on a regular basis. You need to do your sales also on a regular basis, and that's how we have been focusing more on end users than on the investors.
Yeah. Thank you very much. That's a great insight, sir. I'll come back to you with those thoughts. But I think, Mr. Ravindra Pai, did you get my question when I was reading out that?
No, actually, I lost you, Aslam. If you can maybe.
I'll just repeat.
Sure.
Mr. Pai, in an interview last year, you had made some very pertinent remarks on how Century Real Estate Holding identifies suitable locations and configurations. You also remarked that post-RERA, customer interest had begun to pick. Of course, post-COVID or during the COVID, the things have changed completely, and now the entire market is driven by the end users. So I want to understand like how you are calibrating your inventory now. Are you only looking for end users, or you have also taken into account the interest from the investor? This is the first question. Second, I also want to understand from you what's your view on increasing interest of investor in plotted developments, plus ready to move in segment, luxury segment, I would like to say. So please, over to you.
Thanks so much for the question, Aslam. I think it's a great effort by the team in putting together this virtual sort of a panel. I think it's definitely not easy in these times. Also with all the technical issues, I think it's never easy to have something, trying to put together 5-6 people on the online panel.
Exactly.
what I wanted to do, Aslam, was that very quickly maybe touch on the context of where the investors have disappeared in the residential segment. And I mean, that's possibly the lead question in this panel.
Absolutely.
Some of the things that we should reflect upon is that if you look at what has happened to the real estate or the residential segment, we have actually not seen any capital appreciation in the last 7 years. I think the last time we've really seen a price increase in the residential side has been way back in 2013. So for 7 years, we've really not seen any meaningful sort of capital appreciation that happened in the residential side. The other big concern that has come into the investors' minds is an anxiety in terms of project completion. It's not so much an issue maybe down south, but we have seen, companies in the north or maybe, where anxiety has grown in terms of whether a project will really be completed or not. So in the past, whereas we used to, most developers, I mean, the practice would be to really sell developments on paper. As soon as we got an approval, we would go into the market to sell. What has really changed now is that RERA also is anxious and wary about investing in a project, that is really not close to. So that's the other sort of a change that has really happened. The third thing, if you look at it from an investor perspective, is what are the avenues for them to invest? We all know there is either, the financial instruments, there is gold, and there is real estate. For whatever reasons, I'm not an expert, but we've seen that the stock markets have really been doing extremely well. Gold is, is at an all-time high. So obviously the sheen on real estate has been a little bit less in the last few years. And also in the past, investors didn't have an option to invest in real estate other than in residential real estate. What I'm talking about is that there were really no commercial REITs back then. So most investors, the only way to get some exposure into real estate would be by investing in residential. That was the smallest ticket size in that sense. So this is really the context in which we would have investors participate in residential. Are you with me?
Yeah, there's some disturbance which we not able to hear you. Bhavna, can you hear what Mr. Pai said in last 30 seconds or so?
I couldn't hear it myself.
Yeah. Mr. Pai, this now we can hear you. Please continue. Now we can hear you.
Please continue.
Yeah. So I was just context as to why the investor interest in residential real estate was far greater a few years back. And like I mentioned, it was one lack of
Mr. Pai, sorry to interrupt you. I think, Mr. Pai, there's some issue at your end.
Real estate.
Mr. Pai, we are not able to hear you. We'll come back to Mr. Pai. I think, Mr. Pai, if you can please check the connection at your end. In the meantime, I'll take the question to Mr. Irfan Qazi. Mr. Qazi, the fund guy, the fund man, who's like most sought after in these times. Everybody is looking towards SWAMI fund. Everybody is talking about SWAMI fund. You grabbed all kinds of headlines when it's got launched. And I would congratulate you that you have done a remarkable work with you and your team, definitely. Already some 12,000 crore sanction had been done, which will complete around 81,300 incomplete homes. And of course, many of these units has been sold to investor too. So one of the reasons why investor appetite had reduced in recent years is because of lack of trust and momentum. So my question to you is, do you feel that once stuck projects start showing good progress on the ground, the residential sector will again start attracting the investors?
Hi, Islam. I hope I'm audible.
Yeah, you are.
Good afternoon, everybody. Thank you very much, Estate Summit and Awards, for giving me this opportunity. To address the main theme and your question, at one go, is there are two kinds of investors, right? Everybody has focused on the investor who actually buys to rent, right? I'm guessing that's one context or one subsection of investors. There is another section of investors who are actually financiers. They finance the project and they structure the their finance is structured as an investment in the project. So these are two, while the same terminology is used, they are two completely different categories of investors. With respect to the first category, the investor who buys to rent typically is someone who would have some surplus, right? Wants to deploy, doesn't need a house, and then you look for investment avenues. And like someone spoke about, how many options do you have? You have gold, which hasn't done spectacularly well either. You have the stock markets, which are doing tremendously well, and we can get into a longer discussion on whether it's liquidity driven or not. But that aside, it is doing very well. And the only thing that comes to mind here is the risk appetite of the investor who invests in the stock market is vastly different from the risk appetite of a risk-averse investor who will invest in real estate. I don't think it's the same individual who's looking at investing directly in stocks and considering at the same time investing in real estate, because the risk appetite is completely different. The liquidity of the investment is completely different. So I don't think we are competing with that. Real estate is not competing with the stock market investor. Real estate is in fact competing with a fixed return investor, an investor who's investing in some kind of bank deposits of a longer tenure. And there we are in a low reduced interest rate regime. We might be in a lower interest rate regime for some time, and therefore it is possible that such an investor might consider coming into real estate, right? And looking at rental yields, and rental yields are, there is no polite word to say it, absolutely low. 2-3% is not sufficient, but 2-3% suddenly compares reasonably well with 5% if there is a capital gain component that can be considered. Unfortunately, what has happened is over the last 4 or 5 years, or even more, capital gains has been missing from the real estate segment, right? And therefore, the investor coming in immediately, I think it's in a wait and pause mode. That particular investor, he will come in, but he's on the ringside now. He's waiting to see how the market turmoil, especially in real estate, plays out, right? And at the same time, he has other real estate investment options. So like someone mentioned about warehousing and commercial and so on. So that's one side of the story. I want to in fact draw attention to everybody to the other side, the investor who's actually a financier. And there I have nothing better to say but for the fact that the market has changed, right? What used to happen will not happen going ahead. Life changes, the industry has changed considerably. There is now a preference for finished units as opposed to under construction units. Some of the panelists here represent the, have been having the best quarters ever in terms of sales.
Yes.
So suddenly there is a respect for brand and there is a trust in a brand, right? And that is why you see Mr. J.C. Sharma reporting, such fantastic numbers, and so on. So the market has changed. The investor has becoming, the investor and the end user is becoming more discerning, right? And with change, there is collateral damage. So what, the financing structure of the past is no longer true. And that's where people like, the SWAMI fund come in, right? The SWAMI fund is an alternative to financiers. The SWAMI fund is an alternative to investors, right? And it's an alternative with one, bigger gunpowder, more gunpowder. So we have far more than what most investors would be willing to offer investors. But more than that, let me just play with words here. We offer 3 C's to the developer, right? We are cost competitive. We offer credibility, and we offer completeness. And let me quickly go over each, right? So an investor as a financier had tremendous return expectations. And therefore, that, when the financing cycle was complete, that was reflected in the price of real estate also. So real estate was, beyond affordability, right? The return expectations were north of 20%. that is to be compared with the SWAMI fund, which is providing at an IRR of 12%, right? It does not expect a coupon, it's back-ended and so on. But more than that, what the investor as a financier could not get to the table was credibility. What SWAMI gets to the table is credibility in terms of the fact that what we've seen, and I'm not talking about what might happen, I'm telling you of what we actually see in our projects. So while the general market is improving and the beta of the market is also getting reflected in sales in projects we are funding, we are seeing an incremental collection, incremental sales in our projects, simply because home buyers and end users know that the SWAMI fund has stepped in to complete the project. And that's the third C we offer. A financier can never, talk about completing the project. A financier's interest is limited to the amount that he's financing and the return on that. Our interest is on completing the construction. And that's why, all three work together, right? That's why we get credibility to the project. That's why there is trust and so on. So I think one portion of the investor market is gone, right? It was dealt a crippling blow with demonetization, because that was also an avenue for maybe unaccounted funds to come in. With greater transparency, GST, RERA, all that was just drying up. I think the lethal blow will come in with funds like the SWAMI fund, which will provide completion funding to developers who are under stress, and therefore they do not need to go in for high cost, unorganized funding. So that's one portion of the market. The other portion, I think, will depend on what kind of capital gains investors see in the market going ahead.
Great insight, Mr. Irfan. Great insight. I think respect for the developer, respect for the brand, and the new kind of financier like SWAMI fund. And I think we need more of such kind of funds to be with the market or with the real estate industry to take this to the next level. Thank you very much. I would come back to you on that because there will be some questions regarding what you just. I'll go back. I go to Mr. Abhishek Kapoor of Puravankara. Mr. Kapoor, last month we heard that Puravankara is planning to invest some 3,000 crore in pipeline of 11 projects. This is again a very good news despite the COVID, because during the COVID, during the lockdown, we all were thinking that the market will go bust and post COVID there's only doom. But these kinds of news actually give the new impetus to the market, and I think this is showing to the new hope that market will revive and it will go on. So my question to you, like when you plan these kind of investment, so are you thinking again, the basic question, in your mind, only the end users are there, or you also factor the investor activity? If you did find some investors, so what kind of profiles are there? What kind of percentage they are getting into the your projects?
Let me address this in two parts. I'd like to first share with you as to why we are excited about new opportunities and new launches. The last 6 months, if you see our half-yearly results, our numbers were better than the previous year. And we have already done 3 launches compared to our total pipeline, which is of about 11 projects. We have done 3, 4th one is currently in process. What we are seeing on ground clearly is there is because of interest reduction and because of where we are as a real estate industry and the cycle of the industry, and what has happened in COVID, a lot of people who are deferring their buying decisions. Now, I'll split the buying decision into 2 categories, or rather 3 categories. There are first-time home buyers. There are home buyers who are looking for an upgrade. And then there are home buyers who have a future plan. They are kind of fall into the category of quasi-investors, I would say. Because, for example, I have 2 kids. I want to buy 2 homes for both my kids and, keep it there, right? So that's an example I'm just giving. Or I have a joint family and, another brother. We have deferred the decision. Now we want to buy. Things like that. And then, of course, there's a 4th category which we talk about, which is purely investor. And in the old times, if you remember, people used to flip asset within the cycle of the project itself. I mean, forget about completion and things like that. People would, right, which is what I think Irfan was talking about in the way people were funding, their projects. So The fourth category clearly is not there anymore. There is no investor, and in fact, even developers and across the board, across the country have realized that that's not really the source of funds. I think a lot of that sourcing of funds or capital raised for residential projects has moved towards institutional capital. And we are, of course, seeing a lot of traction from institutional capital, which is wanting to get in to the with the developers who are branded strong players, showing strong performance track record and deliveries. So, that consolidation piece of institutional capital is going to enable these set of players who will then scale up and take away larger and larger market share, which are organized, structured, professionally run, players. Having said that, coming back to our plans of launches, what we have seen in last 2 quarters for sure, and this started very early for us because we've gone very, very aggressive on our digital platforms, and we've been working on that for a while. Other than our strong distribution network, which we have, what we have realized is clearly, while stock markets is a great investment, gold is where it is. Real estate as a asset, and not necessarily only as an asset. And I think Irfan mentioned that you have to compare this with a fixed investment asset, right? Where you're talking about, or I think Ravindra mentioned. So you're talking about a fixed return on investment kind of asset. Now, when we are talking about real estate, in that context, people who are deferring their buying decision have started to look at this asset. They are not necessarily looking at significant capital appreciation, but they're saying this is a good asset to have in my portfolio, and there could be a quasi end user need for that particular asset, whether it is in the form of upgrade when it happens, and therefore you sell your current apartment or current home, or whether you're talking about planning for your future and for your family. So we see that also as something which has started moving, which was not moving that much because people were deferring those decisions. Having said that, one more category which we feel is definitely very interesting, and we have seen, we did one of our launches was in the plot development. We believe that category is definitely going to see a lot of traction in times to come. So, so that is definitely an opportunity. And when we are planning all our launches and our investment, that clearly is an indicative of our optimism. While the total market size may not look like it will balloon in the future, but the market share of organized players versus the total market share is going to increase. And hence you see this growth and better numbers of organized, structured, branded players.
Very true. Very true. I agree and fully agree on what you said. I think this is the time whereby investors, or let's say we're talking about end user, they are going for a branded developers with a good track record and on. I fully agree on that. That brings me to Mr. Amit of Tata Realty. Last but not the least, Tata has been the founding stone for the India development, and Tata as a group has done so much in different sphere of industry. So, Mr. Ram, I think you are the most proactive developer, whereby you try to frame some kind of offers and schemes to attract end users. So my question to you is do you do the same, or you have planned to do something for the investors as well, to bring investors on the table? Or again, the same questions to you, in your sales, what you have seen in last 6 months or a year, what kind of participation you are seeing of the investors, or there's no participation at all? One last question would be from the government side. Do you think government should do more what they have already doing, or should do more to bring this residential market to the new highs, or whatever we are seeing right now as a uptake of inventory, it should sustain for the coming years so that it will be benefit for the entire industry?
Okay, so let me answer this in different parts. So first of all, as far as we are concerned, we had a good portfolio of residential units across India. So across 15 cities that we are present in right now, and largely 80% of our inventory is in the ready to move in stage. So post-COVID, when this transformation, or rather when we were grappling with this fact that what's exactly is going to happen, how the industry is going to behave, one trend which emerged very clearly was serious end users. No more window shoppers, or less amount of window shoppers, because visits were less. Nobody was just trying to while away their time by visiting project to project. They were more serious buyers. And hence we got a very strong traction from the fact that these were serious buyers. They wanted to buy homes. Looking at COVID, and they were quite clear that we don't want to stay in rented apartments, or we want to own a home of our own. So that was a big traction that we saw across most of our ready projects. Agreeing to views from other panelists, yes, branded development, trusted developers, developments right in front of me, standing tall, ready to move in, was the flavor of the time in the last 6 to 8 months. So that attracted a lot of end users. So to your question, do we tailor make our schemes for investors? Since our portfolio is 80% towards ready delivered projects, uh, investors generally in real estate comes in right at the beginning when you launch the projects. So we've seen those investor participations in launches when we did in 13, 14, and 15 and 16. So we had our share of investors coming into the relevant projects during those times. So by and large, in delivered projects, possession given projects, investors have moved out that way. But commenting on the overall industry scenario, looking at Bombay and Delhi, we have seen two sets of investors. Bombay investors earlier used to look at their investment both from the buy side as well as from the appreciation side. So buy, how much I can reduce, how much I can negotiate. So that would be my sure shot gain. And when I try and take advantage of the capital appreciation, that will add to my margins. So now we are at a stage where the buy side is becoming attractive primarily because of the fact that there is a huge inventory overhang, there is huge supply, developer to developer, the situation is different, and hence some bit of distress that was there in the market. Investors were choosy about such projects. One. Second, earlier they used to invest and take the risk vis-a-vis the cost at which they would buy was on an under construction project. Now that risk is hedged because the unit is by and large delivered or at the stage of delivery or handover. So that's an added benefit that the investor has. So what he is looking at, ready unit, how much lesser can I buy at, and looking at this, comparing with the historical prices where the corrections have happened from, if that were the prices that it were to reach to, say, a year and a half down the line, 2 years down the line, that's the advantage that I have. So such kind of investors are definitely back in the market. Bombay has seen good amount of such investors picking up stocks in South Bombay area. Our project in Delhi, Gurgaon, Premanti, which is a villa come apartments. Apartments have flown off the shelf. There are no apartments left anymore. People are buying villas as well. Investors looking at not using it for the time being, but yes, from an investment point of view, they feel that this is the right time to buy because they're getting a good bargain there. Coming to your third question, what should government do? Yes, government should take this initiative because this is the right time where all the developers are willing to take that extra pain by while they have faced the situation, COVID pandemic, but then at the same time, they're ready to take extra risks as well. So a move by Maharashtra government with respect to stamp duty reduction has been a welcome move. Most of my developer friends have shared good numbers in the last 2 to 3 months. In fact, units that were sold have become are getting registered, which means hassles around collection is also becoming easier because people are registering those units at a lower stamp duty rates. So similar action partly taken by Karnataka government as well. We are hoping that other state governments also take such actions, because on one side you have the lowest rate of interest, which is at 6.75, which is, I think, back to 2004 levels. 2004 was when 7% was a fixed home loan rate, or 6.9% was the fixed home loan rate at that time. So nobody is going to get that. And that also brings to the fact that your rental yield and your cost of home loan the gap is lower now. So that way, for any end user as well, it makes a lot of sense for him to invest into real estate if end use is the objective for him. So government definitely needs to take those calls in the short run to bring back those serious buyers, because that will immediately allow those fence sitters to commit to their decision. And end use and consumption is a big driver in India. while we have a huge inventory overhang, but then there are a lot of end users, consumers waiting to buy their first home as well. So our new launches will predominantly focus on end users because the product structure has changed now. The desirability of larger spaces, spaces with balconies, etc., has come into vogue again. So that way we are looking at it from that aspect as well.
Got it. Got it. Thank you very much. That's a great insight. I think quickly I want to go to Mr. Ravinder. He needs to complete his what he was trying to say at that point of time. Mr. Ravinder and rest of the panelists, we have actually, because of some problem, we only have 5-10 minutes left, 5 minutes precisely. So after Mr. Ravinder, I quickly have one round of quick yes or no answer from each one of you, and then we can wrap up for the award function. So Mr. Ravinder, please go ahead.
Yeah, thanks, Aslam. So I was just beginning to, sort of talk about the context as to where the investors have disappeared. And primarily because there has been no capital appreciation that has happened over the last 7-8 years. Projects have been stalled. There's anxiety for people to invest into projects at a paper stage or at a greenfield level. Other options were very limited back then. There were no REITs for commercial and things like that. So if you wanted a real estate exposure, you had to necessarily invest in residential. Today, the scenario is very, very different. Stock markets and gold are at an all-time high. Real estate prices have not gone up, so it becomes a very, very sort of a feasible alternative to invest. So, other panelists spoke about the interest rates being at its lowest. We're finally maybe seeing the rental yields moving into some sort of a positive territory, for the first time ever maybe. And COVID in a way has really changed the entire outlook for the industry. All of us were really concerned when it happened, but everybody had mentioned that, in fact, the last 2 quarters have been possibly the best in most of our sort of, history in the, last few years at least. One of the things that I just want to talk about a little bit is the demand for plotted developments, because that is something that we as a group are quite focused upon. We believe that from a developer perspective, it's of course less capital intensive, less execution risk in that sense, and it's a faster turnaround. But what investors are really seeing is that they're appreciating that it's a good investment tool in the sense that it is, the ticket sizes are lower. The potential for capital appreciation. Yeah,
please.
Yeah, the potential for capital appreciation in plotted is higher, because these are typically in the peripheral areas, and, a large amount of infrastructure is likely to come up and things like that, which means that the potential for increase will be higher. There's minimum time between when they book and when they really see possession. They don't have to wait for 3-4 years, as in the case of an apartment. And also from a resale perspective, there's a lot more interest. And as we all know, land, there is a scarcity, they don't make land anymore, as Mark Twain said. So obviously there is a sort of a fascination for land. So plotted is something that has been extremely sort of encouraging for us. We in fact launched a project called Century Eden through the lockdown. And we're happy to state that we had an 80% of the project was sold through the lockdown. And not just that, we also were able to manage an increase in price, when the lockdown was happening. So these are some of the things that I just want to state. Overall, I think the COVID has been in a way a blessing in disguise, I would say. In the past, the large amount of inventory overhang was also because many developers would sort of launch projects without really sort of truly understanding what the market was. We're now seeing a lot of consolidation that has happened. People talked about branded players. From a customer perspective, this really gives security. From a title perspective, approvals are smoother. So overall, I think COVID has in a way sort of changed the dynamics of the industry, and possibly for the good.
Yeah. Actually, COVID has changed everybody, how we live and how it has affected every aspect of our lives, actually. Bhavna has actually come on to the screen, and I think she is putting me like the time has over. Bhavna, this is not right, because I think this is as I earlier said, there's a lot of experience on this panel, and we could ask only one question each. I think we could have got one more hour. I think it would have been better. But nevertheless, it's fine for the next time. So over to Bhavna. Though I have a few questions to ask, but leave it to you now.
No, Mr. Aslam, you could definitely continue. I was in fact looking forward to the yes and no's which you were saying. So I thought I'll come on the screen and enjoy that. So please continue,
All right.
Mr. Aslam.
So let me ask, because there's one question which I think for the audience at large that we need to ask each panelist. So my question is for everybody, then each one of I can ask individually. The question is like what we are seeing right now. Okay, we all understand the real estate market. We all understand what's happening in COVID. So need not to describe or discuss in detail what exactly, but just for audience, at a large, we want to understand like what we are seeing right now. A euphoria which is happening and people are buying residential units. Definitely, but it's going for mostly for the branded developer plus those guys who have actually 70-80% completed projects are there. You think this is what kind of this will continue post March, or what you think as a future? Let's say let's talk about only next 12 months, and what should be the steps of we should take or the government should take to so that can be sustained for the longer time quickly actually. So start with Mr. Amit, if you can tell me.
I think this move is going to sustain. The demand is going to be there, and people are very clear in their minds that yes, they have taken a decision now to buy a house. Sooner or later, people will go and commit to that decision. Government has taken initial steps. I feel there are more such steps that they should take in the immediate future to boost the ongoing demand surge that we have seen in this last.
All right, thank you, Mr. Abhishek.
My view is also pretty much in line with what Amit said. I think this is a sustainable demand. I believe, and I was watching some of the eminent speakers and listening, and my view is also pretty similar that this is like a mild U, and we are already in the process of that mild U happening to the economy in general. And hence, as the economy improves, which my anticipation is that we may not see a significant change overnight, and that is not expected and that is not real. But what we are saying is that there is a trend that this is bottomed out and it's kind of turning around. And the moment, and it may be a little gradual process for some more time, maybe for 2 quarters or 3 quarters more. But having said that, if we think that this is going to drop or reduce, I think I would beg to differ, and I believe that this will continue. And over time, over next 2-3 quarters, we will see definitely there will be an improvement in the overall sentiment, and the demand will sustain.
Very, 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 very interesting and very hopeful. Mr. J.C. Sharma, please.
See, my belief is that right now with low interest rates, the demand is likely to sustain even during this pandemic period. Thankfully, we have found out a vaccine, and thankfully, the Indian economy also has started showing every sign of bouncing back. So the people and the industries which got impacted, gradually they will start getting back into their life. And those set of people also will start joining this bandwagon till the prices remain affordable, till an Indian household has got higher savings, low interest rates, under-owned homes. This time, structural growth of the housing demand is going to be there for many more years, much more beyond 1 year or 2 years time horizon. We need to look at India vis-a-vis China. And when we compare that, and then we compare our housing consumption, we have a long way to go. We have a low base. And I think everything more or less structurally has been put in place. This is the time where we need to keep growing and start thinking bigger than what we have thought so far.
All right. Thank you, sir. Mr. Ravindra, please.
So I think lower interest rate regime is here to stay. Shortage of homes is well documented. So I'm quite bullish personally that this will continue, but largely in the affordable segment and plotted. I'm not very bullish about the luxury segment. Also, I think this pandemic has taught all of us that, come whatever it is, we need a roof over our head, and real estate is a tangible asset, which doesn't just disappear overnight. So I think I'm quite bullish, that this will be a sustained demand.
Okay. So I think all the developers are very hopeful, and I am part of that bandwagon. So that's why I kept Mr. Irfan Khan to the last, so that somebody has some different view, because all the developers, and I am part of that company. So Mr. Irfan, your views on this?
No, I'm on their side. I'm both optimistic and realistic on this, right? There is no reason to expect that the future will not be better than the immediate past, or even the past for the next 6 years or so, for the last 6 years or so. Simply because affordability is at its best. Home prices are not appreciated. This is the time when there is a lot of pent-up demand. So it will be regular demand plus the pent-up demand. And I think that, over time, one of the bogeys that has threatened, that has been spoken about so much, will play out and will no longer be a threat, right? So this inventory overhang is more a bogey than a reality. Hardly 10 to 15% of the total inventory is actually completed inventory. Right. So the developers, and that is what is selling. So in an environment going ahead where there is an emphasis on completion, where RERA is being implemented and is being observed both in letter and in spirit, where the industry has got professional developers with high caliber, with a corporate outlook, with significant trust in their brand, there is no reason why home buyers won't continue to come in. So we are hopeful, and that's the reason why why the SWAMI fund will step into complete projects, because completed homes will sell.
Mm-hmm. All right. Thank you very much. I think with the Bhavna and other, I think the organizer had given another 15-20 minutes more. So I will take full advantage of that. So Irfan, continue with you. Most of the people, I am talking about the laymen, like I know all the eminent panelists with us right now, they understand how SWAMI fund works. But at a people at a large, if you want to understand it, to give the feedback, most of the people with the view, SWAMI fund comes where the project gets stuck, whereby let's say some sales happen, and now the developer, particular developer, does not have money to complete that project, and you step in. Is that anything else that SWAMI fund does, or if what my understanding is right or wrong?
So that's a reasonable one-line description. But let me just tell you, we don't come in when everything is, when the situation is resolved has deteriorated beyond a resolution, right? We can come in even before, when the project is stressed, when collections are back-ended, and therefore for construction to progress, cash flow has to come in. And the investor, that is the theme of this presentation, is not there. When sales, which you are expecting, are not happening, that's when the SWAMI fund can come in. The SWAMI fund can come in as long as the project has started. It's about 30% complete, where some sales have been registered, where their home meets the description of an affordable and mid-income product, right? And where it needs funding. It need not be stalled. It could just be, stressed for lack of funding, and the funding is not available from the traditional sources, which is that, there are no new sales, or the sales or the collection pattern is back-ended, or the existing lenders are unwilling or incapable of providing further funding. That's when the SWAMI fund can come in, step in, and take responsibility for completion of the project.
That's very, very, very helpful. Actually, I think it will help many people here, because the impression is different. But yes, when the project is about to feel, or the developer about to feel stress about cash flows and the sales, I think they can come to you. Thank you. I think though we have time, so please finish by 1:40. That was told to me. Okay. So now the question, one more question which we can have with all the panelists is like, yes, I think most of you spoke about, starting from Irfan and everybody else, spoke about that there's an alternative avenues for investors to invest right now. So there are commercial properties, there are gold, there is stock market, there are warehousing, logistic, which is the flavor of the season. So my question is like, what you think like now, because of COVID, there's a particular, let's talk about the commercial side. In COVID, we have seen that there's work from home culture has started. So the investor who are there in the commercial segment right now may be looking at the residential as the alternative. And Mr. J.C. Sharma rightly said that how we attract investor into a residential market by improving it at much faster pace and getting it attractive for the investor. So what are your views on that? Like if commercial is not, I'm not saying it's not doing well, but if commercial is little bit under cloud, so what we should do to bring investor to the residential market? So starting with Mr. Abhishek Kapoor.
I think, see, the way I see it, there are different product categories that are available today. There is clearly a opportunity in the co-living space which is there, which has not really moved in a manner where, and that's a rent or a yielding asset. Now there, if there are opportunities to create that yield and create that asset base, with smaller investors being in place to bring that back. But if one was to simply look at just pure residential real estate in the conventional form of investment, then in that case, I think I would go with what we were discussing earlier, that those opportunities which were where investors going to look at real estate in a slightly longer term perspective, which is like 5 years over the life of the project, and see the appreciation. Those investment opportunities, if people are taking at looking at longer term, may come at the time of launches, which and the fact is that there aren't enough launches that are planned, and which is again the reason why we wanted to do more launches, because we saw that as an opportunity, that because there aren't enough people who are able to launch in these markets and in these times. So at the early stage of the project, typically there are opportunities for investment, because the project, as it gets completed, sees some amount of capital appreciation. So people who will look at it from a longer term perspective may look at it, and a diversified asset class, which is a stabilized asset class, they will look at it. So I see that these are 2 or 3 opportunities. And of course, there are certain schemes which some of the developers are coming up with, for the investors, where the kind of down payment they're looking at taking on is much lower. Those are some opportunities, but then, that is also fraught with risk. And one must be very, very careful in the way. And the financial institutions are not going to look at it very, very, nicely. So one has to be very careful in calibrating those investment, those schemes. But I think these are 2 or 3 opportunities as I see it.
Great insight. Great insight. Mr. Ram, Mr. Amit.
So I will limit my opinion only on the residential part to start with. Yes, like Mr. Pai was sharing, plotted developments is again a new avenue of interest. Why? Because smaller sizes, people with loose change can easily buy a plotted development and plan their exit as well, because there are less hassles of owning this asset and then liquidating this asset at the right time. So that has become again a new area of interest, and I can see many such plotted developments flew off the shelf in the last 5-6 months. We also have one plotted development in Chennai, and we could see a great amount of traction, particularly in the last 3 to 4 months. Then that is definitely one of those avenues. The other avenue or area of interest is the commercial units that we have built in all our residential complexes. So all the retail units that were there earlier, we used to keep it towards the end of the project life cycle to be sold, because the realization would have been the best at that time. So, but we were initially having a bit of a struggle about a year and a half back, but post COVID pandemic, during pandemic, all these investors have picked up these units, because again, pandemic has made it very clear that residential developments need to have the essential services right at the base, within the development. So medical stores, grocery stores, essentials product stores, and all these services have to be in the development if development is of sheer size. So that's another avenue for any new launch to look into, that should we have enough number of retail units within the development, because that could be a good you can sell it at towards the end of the project life cycle. That's definitely one such avenue where as a part of a new format, which will also get sold in the, and definitely the sizing. I'm more concerned about the fact that, like Bombay as a market, we were used to have those cramped houses, cubby holes, luxury was defined in 1500 square feet only. Now 1500 square feet in certain markets like Bangalore and Pune would be a 2.5 BHK or just a 2 BHK large. It would not be more than that. So now Bombay is also asking for, and there is a latent demand creeping up for a larger 2 BHK or a larger 3 BHK apartments with decks and all that. So that product change will also will be seen in the new launches that will come, and eventually that will be taken up by the end users and the investors.
Thank you very much. Mr. JC Sharma, your views, please. Mr. Sharma? I think he's not able to hear me. Mr. Ravinder, if you want to give your views quickly, we have little time.
Yeah, sure. I mean, Aslam, you're right in the sense that I see that commercial will suffer in the short term, but I don't see it being a long-term phenomena. Right, we all are today sort of used to working from home, but I don't see that to be a permanent phenomena. There may be a drop in demand of maybe 20-25%, but commercial will come back. Having said that, I don't think an investor will really look at commercial investment as against a residential investment. I think these are two different animals. The person looking for an investment into commercial will be looking for a yield. We'll be looking at as against other instruments and things like that. Whereas my view is that I don't see investor coming into the residential space anytime soon. I mean, Irfan talked about the two kinds of investors. Primarily, residential will be supported by institutional investors. I don't foresee, individual retail investors really participating in this sort of a space. These will be end user driven for brands, closer to completion, affordability, and things like that. So I don't think it's a substitute that, since commercial is going to suffer, will I move my investment to real estate? I don't see that particularly happening.
All right. Thank you. Mr. Sharma, your views, please.
See, my belief is my belief is that the cycle has turned. The cycle has turned.
Okay.
Right. This momentum should continue for a few years. Interest rates are not likely to go up. India remains highly under-owned. The people have less choices right now, be it stock market, be it gold. Not that they're not going to go up, but with relation to when we look at 5 years, 10 years, 15 years indexing, real estate prices have moved the least vis-a-vis all other asset classes. So we are entering into a phase where from the supply side, there will be challenges, there will be restrictions. From the demand side, there will be an uptick because it is a service-driven economy. Indian economy is a service-driven economy kind of a thing. So the demand will keep rising, supply side constraint will be there, prices are low, interest rates are low, affordability is better. So I think we are entering into a good phase and hopefully all of us will see much better days ahead in times to come.
Okay. Very encouraging remarks, Mr. Sharma. Very encouraging. And Irfan Saab, I have already asked you the same question, and actually you started with that. Then I went to other panelists.
Aslam, I just want to point out, right, that we've just come out of, and saying we've just come out is being presumptuous. I hope we have, but we are in the process of coming out with the 90-95% results that some vaccines are scoring. We are just coming out of a period of great uncertainty. People are, still have the nightmare of losing jobs and careers being threatened. And even in that scenario, when sales have picked up so rapidly, there's been I think that's an indicator that the future might be a lot brighter than we would have otherwise hoped for. Well begun is half done. The momentum is tremendous. So if factors continue to play out, we could be in for good times for the entire industry.
Right. Rightly said. I think well begun is half done, is rightly said. I think it was an interesting and very, very informative discussion that we had today. I think if I have to summarize, I think everybody spoke about like Irfan said, that there has been a new breed of financier who will become the investor for this industry, residential industry. All the developers have the view that we have to devise new strategies in terms of product sizing or in terms of product segmentation. We have to get into plotted developments. So I think the key is investors are there, but they have changed their face or they have changed their forms. Investors are there, and one way or the other way, they are investing in residential. And with the last thing was, which I asked everybody, how it will be go in next 12 months, but everybody has a view that it will sustain for long. That is very encouraging coming from all of you. So I think to conclude it, I think investors are there. It's just that how we tackle them or how we identify them in the market. and take full advantage of that. We have to make our industry, residential industry, so attractive, make it like so that the investors who have gone away then can come back, but with a different kind of rules and regulation, which will be beneficial for all. Thank you very much. With that, I conclude and hand over to you, Bhavna.
Thank you.
Thank you. Thank you so much, Mr. Aslam. Thank you for joining us. And ladies and gentlemen, we're going to be moving in with the awards in just about a few seconds. Well, we hope you all
Bhavna, we lost you.
Well, thank you so much. Apologies, Mr. Aslam, slight network issue on my end. But, with all the expertise, Mr. Aslam, I really had to request the team to extend the time because, as you rightly said, that the experience is beyond comparison. So thank you so much, Mr. Aslam, for moderating it so brilliantly right now. Thank you once again.
Thank you.
So we just request our panelists, just for the next 10 minutes, I'll be quickly doing the awards. So we'd request you to kindly stay back as we edge towards our set 3 of awards. Thank you for your valuable time right now. So ladies and gentlemen, let's move on to the set 3. We're talking about Emerging Developer of the Year Residential Estate. And the winner is Rishi Knox Buildwell LLP. Well, Rishi is one of the most valued real estate organization in Eastern India, known to deliver the finest architecture and a stellar quality of life. Congratulations, Rishi Knox Buildwell LLP. Well, moving on to the Best Innovative Marquee Developer of the Year Residential South, and that goes to Spectra Constructions Private Limited. Well, a design-centric real estate company with a vast acumen in engineering, Spectra Construction Private Limited has developed premium residences across Bengaluru for over a decade. Well, ladies and gentlemen, for the Pathfinders Award for the most enterprising CXO, and it goes to Dr. Nitesh Kumar Imami Realty Limited. Well, a proactive and a multi-skilled professional offering over 28 plus years in real estate industry and funds, executing multi-dimensional projects, retail, commercial, residential, institutional, and multiplexes with proven strengths in corporate strategy, marketing, innovation on the most competitive terms. Well, ladies and gentlemen, Developer of the Year, Commercial National, and it goes to DLF India. Well, with more than 73 years of real estate investment, development, and management experience, DLF has an unparalleled scale of delivery and an unmatched track record of customer-centric service excellence in India. Well, ladies and gentlemen, just some more awards in the set 3. Well, we're talking about the Emerging Consultant of the Year, and that goes to Oiki Shreem Infratech Private Limited. Well, Oiki Shreem, they take pride in the excellence of the work and opportunities for personal growth, where they provide our people and contributions to make the communities. Well, they're leading real estate consulting services company. Also, ladies and gentlemen, Lifestyle Property of the Year goes to MAPSCO Group. Well, MAPSCO is leading and growing real estate organization, reckoning its position among the top-notch developers. It is exemplified by its world-class structures and services. Well, ladies and gentlemen, now for our next award winner. The winner is going to be joining us live today. Well, Most Sustainable Interior Design Residential, and it goes to SKL Design Studios Private Limited. Well, an upcoming design firm making its mark for unique designs with the speak of sustainability and elegance. And we're joined by Mr. Sagar Bhargava, the CEO and founder of the group. Thank you so much, Mr. Bhargava, for joining us. We'd request some words of congratulations from your end. Over to you, sir.
Thank you so much for the introduction. I would like to thank Remax India and Franchise India for awarding SKL Design Studio for the award. This award has given us immense inspiration and motivation to work even harder in pursuit of higher milestones in the field of interior design. COVID has reinforced the need for better designed homes, and interior design remains a key catalyst in improving the aesthetic and living experience inside a residential space. The need of the hour is to create adaptable, flexible, and comprehensive spaces. I accept this award on behalf of my team and our clients who have trusted our work and given us the opportunity to serve them. Thank you so much for the award.
Thank you and congratulations, Sagar. So great to have the winner joining us live. So thank you so much for that. Ladies and gentlemen, now for the Best Innovative Marquee Developer of the Year National, and that goes to Godrej Properties. Well, the Godrej property was established in 1897 out of the desire to demonstrate economic self-sufficiency and excellence within India in the pre-independence decades. Well, ladies and gentlemen, now for the Best Affordable, Best Budget Housing Developer of the Year National, and it goes to Tata Realty. Well, Tata Housing's projects are built to high quality specification, instantly making them landmark. Quality has become synonymous with the Tata Housing. Well, ladies and gentlemen, now for the Emerging Developer of the Year, Residential North, and it goes to Birla Estates. Well, Birla Estates as a company are always evolving and exploring new dimensions. Birla Estates takes forward the Birla legacy of excellence in real estate with live designed home and workspaces built upon the values of trust and transparency. Well, ladies and gentlemen, quickly moving on to the Residential Property of the Year North, and it goes to G52 Elante Group. Well, they are into residential real estate for development of the ultra-luxury independent residencies in Gurgaon and Delhi since 2009. With a team of highly skilled professionals, in-depth technical knowledge, and a skill of construction, they stand with the promise, luxury crafted with care. Well, ladies and gentlemen, for the Luxury Project of the Year North, and it goes to Birla Navya, the Birla Estates. Well, we as a company are always evolving and exploring new dimensions. Birla Estates takes forward the Birla legacy of excellence in real estate with life-designed homes and workspaces built onto the values of trust and transparency. Well, ladies and gentlemen, for the next few awards, Most Innovative Project of the Year, Residential North, and it goes to Bixun Ultima Bixun Group. Well, a beautiful neighborhood for a convenient living with seamless connectivity, presenting the Bixun Ultima ready to move 2 to 3 BHK flats in sector Omnicorn 3, Greater Noida, conceived and conceptualized by globally renowned architects. Ladies and gentlemen, now for the final few awards in this set, which is first up, the Smart Project of the Year, Residential West, and it goes to Podar Riveria Phase 3, Podar Housing. Well, Riveria Phase 3 is a residential project launched by the Podar Housing. Ladies and gentlemen, now for the Commercial Property of the Year, Residential North, and it goes to Imperia Mindspace. Well, it takes a meritorious history to translate into a tradition that endures. Well, ladies and gentlemen, now we're quickly moving on to our next bit, which is the Developer of the Year, Residential West. Ladies and gentlemen, it goes to Hiranandani Realty. Hiranandani Group has been one of the most premium real estate developers in India with more than 40 years of experience in this business. Ladies and gentlemen, quickly moving on to the last few awards in this category, which is first up, the Developer of the Year, Residential South, and it goes to Purvankara Realty. Congratulations. Purvankara Limited is one of the largest real estate developers in India, headquartered in Bengaluru with over 60 properties across 8 cities. Now, ladies and gentlemen, for the Most Innovative Project of the Year, Residential South, and it goes to Spectra Raya Spectra Constructions Private Limited. Well, a design-centric real estate company with vast acumen in engineering, Spectra Constructions Private Limited has developed premium residences across Bengaluru for over a decade. And ladies and gentlemen, for the final award in this category is the Emerging Developer of the Year, Retail North, and that goes to Bhumika Group. Well, to be known as a real estate expert in the country and to exceed expectations are the most admired, aspired and acquired name in the realty industry. So, well, ladies and gentlemen, with this, we congratulate all the winners in this category. Thank you so much for joining us at the Estate Awards. Once again, I'd really like to thank all our esteemed panelists for giving us your valuable time and being with us in joining. Thank you once again for joining us today on the Estate Awards and Summit. Thank you once again.
Thank you.
Thank you, Bhavna. Thank you, Aslam. Thank you, fellow panelists, for being there.
Thank you, Amit. Thank you, Mr. Aslam. Thank you, Mr. Qazi.
Thank you. Thanks, everybody.